So we're starting to see the correlation between the speed of vaccination rollouts and expectations for future economic growth. Just this week, in fact, we had property group EPP underlining this, given its specific experience in the Polish market. But in many emerging markets, South Africa included, vaccination rates remain stuck at low levels. So what does the status of our vaccine rollout strategy mean for emerging market economies and investors in general? Joining me now is Schroders senior emerging markets economist David Rees with his perspective. David, thanks so much for your time today. So are you encouraged by the kind of progress being made in any emerging markets as far as vaccine rollout programs are concerned? I mean, are there emerging markets that are leading the way?
Yeah, I mean, it's really been a function of supply, to be honest, so far in the emerging markets. Obviously, a lot of developed markets like the US were able to hoard huge amounts of supply, too much supply, frankly, of vaccines from many different suppliers, whereas in many emerging markets that wasn't the case. So there were some examples like Chile and some countries in Central Eastern Europe where they were able to secure large amounts of supply, and they've been able to roll those out. So, you know, large portions of the populations there have been vaccinated. You could reach some kind of herd immunity in the next couple of months. But there are a lot of other emerging markets across Asia, across Africa, across parts of Latin America, where that's simply not the case, and the supply is too small, too infrequent, and the vaccination rates are very slow.
So what does this mean in turn for investors, David, and how they're approaching emerging markets right now? Because there's a broad dispersion, right, in vaccination rates across emerging markets.
Yeah, absolutely. So, I mean, there's obviously a clear link to economic activity because, you know, slow vaccination rates mean that there's no natural or little build-up of immunity to COVID within countries. That means that they can't fully open and confidently reopen their economies, particularly the service sectors. It obviously also leaves the population vulnerable to new waves of infections and new variants, which we've seen in India, we've seen in South Africa, we've seen in other countries. So it really is key in terms of economic activity returning to normal. And of course, that has some impact on the performance of financial markets. So, you know, not all financial markets, stock markets, for example, are very closely representative of their economies. You know, you've often got miners and things in there which, you know, they're not big parts of the economy. But when you delve into the data a little bit, it does seem that when countries are suffering waves of virus outbreaks, that their markets start to underperform a little bit on a relative basis to other emerging markets. So we certainly saw that in Brazil, where the stock market started to underperform when there was a new third wave or second wave of infections, and it started to perform better once that subsided. And actually, on a relative basis at the moment, we started to see some sides of the South African stock markets just started to underperform the broader EM index as the kind of infections are picking up.
Yeah. Up to this point, though, David, we've received the tail end locally, or the tailwind rather locally, of global market performances and the kind of recovery we're seeing in developed economies. So how much risk are you pricing in to South African exposure right now?
Well, I mean, for example, the rand has appreciated a long way and is actually performed very well, particularly compared to things like the Brazilian real, which historically is tracked quite closely. So, I mean, that starts to look a little bit on the expensive side now. I mean, the key to that, I guess, is the future performance of commodity prices. So if commodity prices keep rising, then South African assets are going to perform very well. You know, that's a key factor, particularly for the currency. But we are starting to see some signs that the kind of cycle in China is starting to weaken a little bit, which is usually a bit of a headwind for commodities in particular. And so just slightly more cautious than we have been previously, I think.
Let's leave it there, David. Thanks so much for having joined us on the line. That, of course, David Rees from Schroders.